Hi everybody, Brian here from quantlabs.net, sitting in the dark. Today is Thursday, June 6th, 7:02 p.m. Alright, so what I'm about to show you will be part of the new analytics service. Just come under here under quantlabs.net, click on store at the top, go over to the Quant Analytics membership, and this will take you to this page. And down here, you will be able to, actually, let me just set that up properly. You'll be able to go into the option right here for Join Quant Analytics. You pay $47 a month. It's the lowest rate you'll ever get, and you'll be grandfathered into that permanently as long as you remain a member. Okay, continuing our conversation from this morning, I put up a video here concerning this video here, lessons learned of cryptocurrency pair trading. So what I'm going to show you is what I just generated. I've got two scripts here in Python that I've written. The first one here is essentially goes through the three strongest current crypto pairs versus the three weakest players. So we're really dealing with a short and a long, cross-referencing the top three at that time against the three weakest at that time. And what we do here is we're able to generate what we call a p-value through co-integration testing, and we are looking for any p-value less than 0.05%. So very important to know that. So I have another script here that I can run, and essentially what this does, it will generate. Now, first of all, I just want you to know that this pair here, which is everything against US dollar, dash being the long, short being the Bitcoin Cash. So I just thought I would generate the data for you just to show you that this is not stationary and not co-integratable. So here we have the name of the chart. Again, I'm hoping to put these into the analytics service depending upon, I don't want to overwhelm people with charts that are not really useful for people, but it can be done if need be. So I'm going to show you the first chart, which is a spread with a Z score as well as daily percent moves. And this would be over the last 2 years. So I have talked about in that previous video about the length of time when it comes to co-integration testing. Thank you very much for the folks over on my private chat server. So this is the pair of the co-integration between Dash long and Bitcoin as a short. Obviously, there were some opportunity along here. This is the raw spread between the two. This is when you start to calculate the Z-score model. As you can see here, there may be some opportunities here and here, but it's been quite flat. These are the daily moves as well. And you can see here, it started all the way back to February 2018. So you've had some column shocks between the two of these pairs, but that's the first chart. Again, just one of two charts I'm able to generate. And then we have the stationary Z-score. I'll be talking about this on Monday, live at 12 p.m. And again, here you can see here, it's just been bouncing around. But generally, you want to see this mean reversion back to the mean of 0. And you can see here it says, hey, it's not stationary, which means it don't co-integrate. So what I'm going to do is I'm going to run this again. And we're going to run two scripts. Now they take a bit of time, so I might have to entertain you. So the first script I've got here is, these are customized, but I've used some references. So the first one we're going to run is, let me just, okay, I always forget the names of these. Okay, I think I got to run this guy right here. Okay, so this is again using Kraken data. Screener, long, short. So off she goes. Like I said, it takes a bit of time to run this, so I'll be entertaining you for the next 5-10 minutes. Okay, so let's talk about the future of where things are going. We have here, let me just talk about this past video here. In this video entitled Lessons Learned of Cryptocurrency Paired Trading, one of the things I mentioned was about the length of time on doing these tests. I purposely done it about 1.5 years of data, just end of day data. And again, we're just using end of day for end of day trading, no intraday trading whatsoever. So it's important to understand that. So what it's doing right now, it's looking at each of the 18 pairs, downloading the freshest set of data. That's what takes a while. Then it will go in and try to calculate the bid and ask and generate a ratio based upon the bid and ask. So if you have more asks than bids, that means then you have a price is expected to go up, because that means then there's demand on that cryptocurrency at that time. If it's more more bids than asks, then you can expect the price to drop. But I want to really stress this: in the world of crypto, this changes like every 2 minutes. The bid and ask can shift back and forth very quickly. And I'm going to show you the difference of a new co-integration test, which makes this type of test, the way I'm doing it, kind of useless for intradays. So it's only really worthy of working with daily data because you smooth out all this crazy moves and looking for by hopefully random at that time that you have co-integration at that time, and then run further tests with the second script I'll run, and then be able to maybe determine, at least for a day, be able to do a potential long and short. Remember, this is all being tested, so I could be wrong here, but if people are watching this, they have some ideas to improve it, let me know. I've tried the intraday. At this point, the way I look at it, it's just the volatility is just too crazy the way I'm trying to do it, instead of using fixed pairs of, like Bitcoin Cash against Bitcoin, or Ethereum against Ethereum Classic, which are big crypto coins that have been spun off, where there may be some coin integration in those relationships. So it's still running. Now, once again, there's 18 pairs that we have. This is brand new, so I'm always looking for. Let me just show you what this data represents. Okay. All right, so what we're looking at here is we download the pair. Okay, we download the pair. This is the pair, always in US dollars, and it does a bid and ask against each other, and then that will tell you if there is a long-short ratio, meaning are there more more asks than bids, or vice versa, meaning more bids than asks, which would be negative for this particular ratio. And then it co-integrates the lot once it's finished these 18 pairs. And when I say pairs, I'm meaning coin against the US dollar. So they're all liquid that are found on crypto, on Kraken. And I've dropped a lot of smaller ones that are kind of useless and give a lot of false data. So just want you to understand that. Again, I'll be hosting a live webinar on this topic on, I believe it's the 10th of Monday, this Monday coming up. Today's Thursday, 12 noon, to go over Q&A. And I'll be able to peel back more about this, how it works, the mechanics of it on Monday. But again, there'll be no video playback that gets put behind the paywall. So what's happening here is it's calculated the ratios right here, and the top three are those are the three weakest right here, and these are the three strongest based upon the based upon the ask versus the bid in the world of Kraken. Okay, so now it's doing the co-integration against the top three, against the three weakest. That's the basic logic of it. So hopefully I'll be able to show you a different set. And I do generate a spreadsheet. Let's see here if I can find it. And just see if it's been generated. I think it would be. Okay, I can tell. All this funky stuff that I'm doing right now is, a lot of it comes out of the Python course that I talked about. So this file is still fairly old. It hasn't been generated yet, but it'll get generated in no time. So again, it takes the strongest players against the weakest players, and we see what we get. And again, you can get your access for $47 per, up until, I have no idea, maybe early next week, and then it goes up 30% for this membership under the Quant Analytics, under the store options. Let's see if this gets done. I expect some bugs to be part of this. That's fine. How many people we got watching right now? I think we're done. Nope. Okay. Okay, so there's our latest time change that's been updated. So let me go over and pull it up. This is the XLS, the Excel spreadsheet that it will generate, and this will tell us the co-integration p-values that we look for in all of this stuff. Just waiting for this to load up. Come on. Well, I have no idea why this is so slow. Again, I talked about this in this video. Mentioned here, lessons learned of cryptocurrency pair trading. Wow, this is very slow. Usually this Redis takes up so much. Wow. Got nothing running on here that's going to eat up. Let's see if this is... There we go. Okay, great. So here we have what is the classic. So what the magic number said we're looking for is p-value less than 0.05. We have two pairs. Here's the long and short. So let me generate those reports while that's happening. So we are looking at the Bitcoin, no, generic. Now I'll be fully automating this. Back tester. So many things I got on the go. Okay, so we want generic back tester, all this fun stuff. So I'll run this first one. And now we have to feed in our BTC, the long Bitcoin Cash, as the short because they are currently co-integrated. So I'll show you this. And this is real live data. So this is currently as we speak. So this most likely could be a trading opportunity as we speak. But as I said, you can see how fast things work within the world of crypto. So what it's doing right now is doing a back test of 500 days to simulate if you were to do a short or a long based upon the data it's seeing. It then will also generate charts. So again, I can output this. That's why it's called the back tester. As I said, does 500 days worth. And again, I can fully customize it to anything I want. So I'm going to do another uh, file here. So it's Bitcoin and Bitcoin Cash. So this will generate the charts that we want. And this is real co-integration now. So the time period that we're using is 500 days. Here I'm still testing out this stuff to see if it's profitable, if it's co-integratable, can we make money from this? So right now we've got the two scripts going back and forth. So again, this is a pretty 4-year-old computer, so I am pushing it to its max. Nothing to do with Python itself. So, okay, we finished there. Okay, so we have a new set of charts to work with. So the first one we will look at is either one of these. This one. Okay, this is the first one we'll look at. So right here is a better example of what is co-integratable. So again, we have the raw spread between Bitcoin and Bitcoin Cash. This is, if you know about the Z-score, right here. So this is what you really pay attention to. And this is the percent moves each day over the spread, the averaging, which you can see here. And the other example, it doesn't revert to the mean as much as you can see here in the percent moves. And then this will eventually, so day by day, this is a potential opportunity, but we do expect this to revert back to a mean. So this could be a trading opportunity based upon the Z-score being over the positive one that we want. So if I was to show you the other examples, so here's the spread and the difference between the two of both the long and whatnot. Let me just make sure. Okay, let me just show you the other chart to see if it, because it has to be not just co-integrating, but also has to be stationary data as well. And that's what this other chart will show you. So we want to see this. So it says data is not stationary. So if it's not stationary, then chances are it's not quite trading set of conditions. So the opportunity can be there. If I was to run this script again to generate a new spreadsheet for this co-integration, you probably get a new different set and do it every hour. That's what I'm intending to do. But these opportunities don't come up a lot. And what I will tell you is that in the world of crypto, from my experience, for both mean reverting and it's tough unless you have a brainiac level of doing things on a very low level. There's lots of opportunity there, but it's always the whipsaws I've talked about for months on end. So we kind of, I think it is co-integrating, but it's not. Let me just see what this other script said. So this is the test of if this was true, you could trade it. So these are the results of that back test. And let me just run this one again. This will give you, is it co-integratable and is the data stationary? And again, we'll be able to talk about this more in greater detail live on Monday. So I don't think we want that. We want, I always get these confused. So many files now in Python, it's crazy. So we want, I believe, this one. So run that. I just want to show you the steps of what's generated, how it's generated. But as I said, if you want to know the real nitty-gritty of this, I have to put the arguments in there. So again, it's Bitcoin long, Bitcoin Cash short. So this will do go through the data and looking for if it's both co-integratable and if the data is stationary. So here you go. The results say not co-integratable, not stationary. So even though, now I did talk about this in another video, even though this does say the p-value is co-integratable, this other test that I just ran here does that farther, deeper data to see if the data is actually co-integratable and stationary in order for it to be traded. And if it is, then you can run the back test and you should be able to see some trading opportunity at that time. So that's pretty well everything. Just want to show you, hopefully this will give you an idea, and hopefully I'll see you Monday. And just look on my blog for the link of the Zoom ID, or go onto the Quant Labs net page on the Facebooks and just look up the events and you should be able to find the login ID. Over and out. Have a good day.